Welcome back. A wild ride for the markets right now. Stocks reversing course after selling off about 200 points. So what should you be doing with your money, and how do you want to look ahead? Well, coming up, the advice you need to be hearing on buying the bounce. And it includes stocks that are not in the mainstream, not the big momentum names you're used to. Plus, European leaders are so quick to keep doling out free money. But how do you spur authentic economic activity? More on the European paradox later in the show. But first, my take on this market. Lately, the stock market, it's taken investors on a ride that I would say would be hard matched by any amusement park or even suspenseful movie. But if it were a movie, I think it would be one of those old spaghetti westerns that made Clint Eastwood famous. For instance, yesterday, I think it was a perfect example of the good, the bad, and the ugly. Well, the good, of course, yesterday the market escaped what looked like certain doom with an unlikely rebound. It saw the Dow reverse 550 points into the close. The bad, well, key sectors, they continue to flash red, and it's adding concerns about the overall economy. I mean, think about this. The financials, all 7 money center banks traded down. All 4 regional banks finished lower. All 6 insurance companies, their stocks finished lower as well. Then there's energy. It was sideways yesterday. Nevertheless, all oil and gas equipment names were lower. 11 of 13 independent gas companies were lower, and all the refiners got hammered yesterday. And then there was transportation. FedEx and UPS, they got hit real hard. The transportation index, of course, went down for the ride with them. Now, there's some extenuating circumstances with all of these examples, but it's easy to see that the market is adjusting for a slower economy. The president vets, that presents obviously a serious challenge and, I think, opportunities. In fact, I think momentum names are going to be the ones that roar back quickly into the end of the year, possibly. But next year, if the slowdown, let's say, is not as brutal as the stock market is telegraphing right now, and by the way, I don't think it's going to be as brutal, there's going to be a lot of money to be made away from those momentum names. Until then, market direction will be every which way but loose. Want to bring in B. Riley, FRB Chief Global Strategist Mark Grant. Mark, the message of the market, how you doing? The message of the market, what do you make of it?
Message of the market is we've got a number of significant headwinds. First is China. I think people aren't looking at this correctly. It isn't a trade war. What you have here is a Game of Thrones. 70 years since World War II, America's been the dominant economic country in the world. Japan tried to dethrone us, which some of your younger viewers may not recall. The European Union tried to challenge us, and now China, in a variety of ways, some of which I find acceptable and some unacceptable, are trying to challenge us. And it's creating a lot of difficulties in the market. And then, of course, you've got the Democrats about to take control of the House. You don't know how much we're going to see of legislation. I'm sure we're going to see at least some, if not a significant amount of investigation. And we've got a lot of stuff out there, along with Italy, along with what's happening in France, that are causing dislocations and making these markets, both, by the way, both the debt market as well as the equity market, very volatile at this time.
And having said that, Mark, what I'm seeing is that almost worst-case scenario is starting to be priced into the market. I mean, if we start to do the math, 200 billion times 10%, 20 billion. Heck, I mean, we probably have seen consumers benefit by 100 billion from cheaper gas. So the numbers in of themselves seem to be overblown with respect to how much this market has lost.
Well, Charles, I don't exactly agree with you. I think that the worry, it's a projection of what the risk is going to be. You know, politicians globally, our politicians, China's politicians, you know, the economics isn't on the top of their mind. They're interested in control and re-election and staying in power. And so consequently, from day to day, you can't tell, for instance, with China, what these people are really going to do or not do. They throw this stuff out on the table, and then they take it away, and then they throw more stuff, and then they take it away. And I think the issue, Charles, is risk. There's plenty of risk on the table right now, and I think that's what's causing a dislocation, as I said, in both the equity and the debt markets.
Mark, we got to leave it there. We had a lot of breaking news, but I appreciate your thoughts and hope we can come back and finish this conversation. Good stuff. I do agree risk is the ultimate issue here for investors, managing it. Thank you very much.